All right, so now let's we continue with our accounting standard information. We study about the conceptual framework. All right. So now we continue with I explain you four different things in that conceptual framework. The first was the qualitative characteristics. Second was, sorry, the first was the objective of financial report or the objective of financial information. Second was the qualitative characteristics of financial information. Uh, the third one was the elements of financial information, and the fourth one, operating guidelines. And student, one thing I just want to tell you that uh, don't panic, right? Don't worry too much. If something is you not 100% understand, that's fine, because this is just a first lecture, and financial accounting takes time to understand things as long as you study at home. So don't think that we attend the first lecture and I understand everything about financial accounting, or I have too many questions, why this, why that, why this, why that. It's happened step by step. All right, so whatever questionings are coming in your mind, it will be solved by yourself, but it takes time. Once we reach to that topic, then you understand, oh, what is the difference between financial information and financial accounting or financial statement? So financial statement contains financial information. So sometimes we have a different way to explain one thing. All right. So uh, we have different way to explain one thing. So generally financial information, so you don't have to panic and you don't have to start asking some other people that, oh, yes, you can ask. I'm not saying that um, don't ask. But the thing is that this is just a first lecture. So don't be panic or don't be worried that maybe the teacher said something else and I misunderstood. All right. No, you did not misunderstood, as long as you get it. And if you still not sure that I misunderstood, you can confirm to me. All right. You can confirm me that, okay, teacher, I think that's the meaning of this thing. Am I right? And I said, yes, you are right. All right. So you confirm with me, or you can confirm with other people. It's good to speak to other people, it's good to share with other people, but I'm just trying to say that don't panic. All right, don't worry. To be very honest, financial accounting, it's not an easy subject, especially for those students who never study accounting before, especially like as you. So that's why the first thing you have to do in this subject, don't panic. The first thing, don't worry, don't worry nervous, don't panic, because believe me, in this subject I will go very slow, very slow from my side. But still, if you think that I am going fast, then you tell me more, so I will be as slow as snail. All right, I will go very slowly. All right, so but I'm just trying to explain you that we will go very slowly, very steady, so you don't have to panic. But the important thing is that just one thing you have to do is pay attention. You must know what's going on here. That's it. All right, if you pay attention, even though if I go fast, you would be okay with it. But the thing is that I will not go fast. All right, but the one thing you have to do is pay attention. You have to confirm with me if you still double-minded at whether you understand my information or not. All right, so now let's start. So before we start our we continue with our accounting standard or conceptual framework. If anybody has any question from previous topic, previous lecture, not topic, the lecture, please ask me now.
Yes, teacher. I want to ask you some question is about you say about internal users. So D2D is what is it? What does it mean?
D2D, what is, anybody please tell me what is D2D means?
Day to day.
I think
Yeah.
It's just a short form. It's just my abbreviation, day to day. Day to day means, anybody else tell me what exactly I am trying to say? What does it mean, day to day?
every day.
Yes, daily basis, operating activities, everyday operating activities. That's the meaning of day to day.
Okay,
All right?
I got it. Thank you so
Yeah.
much.
Anybody else? Any other question? No question. All right. So now let's continue. So I quickly tell you where we have stopped in case if you wait. Here. So we have stopped here in the last lecture, right? So we will start with now the objective of financial report, all right? And then qualitative characteristics, then elements and operating guideline, and then this topic is finished. I will try to finish this topic today if possible, right? So this is the last thing of this topic, topic one, which is operating guidelines. So from topic two onwards, we will start calculation, all right? So calculations means how to record everything. All right, so now let's start with the objective of financial report. Objective of, if I say financial report or if I say financial information, don't be confused, because financial report means financial report is the report which provide financial information. Don't think that, oh, why teacher is saying here financial report and why teacher saying here financial information. Both have a same meaning, because financial report provides financial information. So if I say objective of financial information means objective of financial report. Financial report, and we also call it financial statement. Sometimes we call it financial report or we call it financial statement. Both have a same meaning, all right? Both provide financial information, right? Now, what is the objective of financial information? You know that, or objective of financial report. The objective of financial report is to provide useful information, all right? The objective of financial report is to provide useful information, useful information to users, useful information to users so they can make right decision, right decision. It So the objective of financial information is to provide useful information, to users so they can make right decision. Now the question is useful. What does it mean useful? Useful means high quality. Useful means high quality. High quality of information. High quality. Now, what is the meaning of high quality? In order to understand what is the high quality of information, we will look at number 2, which is qualitative characteristics of financial information. All right. So I repeat, the objective of financial report is to provide useful information to users so users can make a decision. That's what we know. That's why we do financial accounting, or that's why we prepare financial report. So users can read the report and users can make the decision, whatever decision users wanna make it. All right. So now the question is, what is the meaning of high quality of information? So now we have to look at number 2 of your accounting standard, which is qualitative characteristics. Qualitative characteristics of financial information. All right. What does it mean, qualitative characteristics? Qualitative characteristics means useful information. But we have to really understand what actually what qualitative characteristics means. High quality. What does it mean, high quality? High quality means 4 things. All right. Qualitative characteristics means 4 things. Information, high quality means relevance, reliable, comparable, and consistency. All right, so I am going to explain all these 4 points one by one. First is a relevance. Relevance. If financial information is relevant, financial information has a high quality. All right. Now, what does it mean, relevance? Relevance means information must be delivered on time, because the time means opportunity. If you are providing information after the opportunity, there is no any value of that information.
I'm sorry, teacher.
Yeah.
Uh, I come in class late, so I think I've missed the.
No, we just started the objective. We just started from here.
Yes.
So
Have you checked?
please turn it on your cameras.
Yes, thank you.
Student, anybody who came late, so please remind me after, I mean, at the end of the lecture. So I will check your attendance. All right.
Yes.
So please turn it on your cameras. No. All right. So now relevance. Relevance means if information delivered to the users on time, right time, on time, before time, then good. If information we are providing to users after the event, after the opportunity, after something happened, then there is no any value of that information. So that information is useless. All right. So I will give you one example. So let me write down first. information must be available before losing its value. So in simple language, it means information must be delivered on time. All right, information must be delivered on time. Now, let me give you one example. I am giving you not company related example. I'm giving you very simple example. For example, you study with me this subject and you know that you will study with me 16 classes, and after 16 classes mean 8 weeks, because 1 week 2 classes. So after 8 weeks you have exam, right? So for example, you will have exam in week 9. For example, week 9 means 17th or 18th day, right? So now, can you tell me, you need my revision session. Revision session means the information about exams, information about questions, what type of questions, how many questions, how long exams. This is called the revision session. So you need revision session before exam or after exam?
Before exam.
Obviously, you need information before exam, right? So you need information before exam. But if I do not give you revision before exam, after exam, I give you information. I'll give you revision session. Do you think that revision session will help you in any way to improve your grades, to make your study decision about this course? Yes or no?
No, teacher.
No.
Not at all, because event already happened. All right, event already happened, activity already happened, opportunity to sit in exam, prepare for exam already gone, because exam already passed. So if I am giving you revision session after the event, it does not have any value. Exactly same thing happened. So in simple language, relevance means the financial information must be provided to users on time so they can use that information to make a right decision. Do not takes too long. Do not takes too long to provide financial information to the users. So generally we provide financial information to users at the end of the year, because at the end of the year means 12 months. So at the end of the year, we provide financial information to the users so users can make a decision. But you are not providing information at the end of every year. You are providing information to user at the end of 1.5 years, at the end of 2 years, at the end of 3 years, not every year. After 3 years, you are providing. That information has no value, because market change on daily basis, market change on weekly or monthly basis. If market is changing and we do not have any financial information about that company going up, company going down, how can we make our decision to invest in that company? All right. So that's why information must be delivered to customer, to users, anybody on time. Everybody understand the meaning of relevance? All right. Now, next is a reliable. Information must be reliable. If information is not reliable, information is useless. All right. Financial information is useless. Remember, if I say information, I mean financial information. Right? Now, information must be reliable. Now, what does it mean, reliable? Reliable means information must be true and fair. So I can explain you here. Reliable means information must be faithful and neutral. Information must be faithful and neutral. Now, what does it mean, faithful? Faithful means information must be true, real numbers, real information. Doesn't matter, is it loss or is it profit? If company has a profit, company should tell the users that we have a profit. If company has a loss, company should tell the users that we have a loss. This is called the true information, true numbers. That means we can believe this company. If you believe that company, of course, your confidence will improve to invest money in that company. So the financial information that you are delivering to the users, that financial information has a high trust, high belief. That's the meaning of reliable. Reliable means something is stable, something is consistent, something is in form of confidence, that brings confidence to use that information. So faithful, true and neutral. Neutral means fair. Neutral means fair. True and fair. What does it mean, fair? Okay. Fair means unbiased. You know unbiased? Have you heard the word called unbiased? Yes. Another word is no discrimination. We also call discrimination means the bias, unfair. So what does it mean, fair here? You remember the external users, right? External users, we have shareholders, you have government, you have customer, you have suppliers, right? These are, we have banks, right? So I gave example of 5 different external users. Can you tell me from your point of view, which user is the most important user for company? What do you think? Which user is the most important user for company point of view? Information. What is comparable? So comparable means your financial information must be comparable. Comparable means when you are providing financial information through your financial report, make sure your financial information must be in a such way so another users can compare your financial information with other company financial information. What does it mean? So I give you very simple example. Let's say when we calculate profit. You know how to calculate profit? Anybody knows how to calculate profit? Has any idea? What is a formula or what is a way to calculate profit? Anybody knows?
Income minus the outcome.
Income, outcome. What do you mean by outcome? Right, income, outcome. Yes, that sounds okay. Yes, but what do you mean by outcome and what do you mean by income? If you can explain. Income, okay. Income means making money, right?
Like cost for the income is the profit, the benefit that we earn.
No, income is not profit. Profit is here. We calculating profit. If income is profit, then why we need to calculate profit?
Oh.
Right? But you are right. Cost. You use the word cost. Yes.
Yes.
What is cost? Can you tell everybody?
The money in and the money that must be spent.
Spend for what?
Spend for work, spend for product, spend for paying salary is the outcome. Yes, and the money that earned from through selling to trading to making business, doing business is the income.
Yes, that is right. Absolutely right. So what is profit? Profit means, we use the word, later on I will study later when we do calculation, but I'm just giving you a very quick idea because this is just the first lecture. So sales minus cost is profit. Now what does it mean, sales? Sales means when you sell product. When you sell product and service, you make money. This is called sales. The total money you earn. Cost means the money you spend. Spend for what? Spend to produce product and service. Whatever money you spend to produce product and money, anything, marketing, advertising, packaging, administration, anything happen, that is the cost. So total cost, I mean, the total money I earn, the total cost I spend is profit. Now what is profit? Profit means the money left in my pocket after minus all the expense. Cost means expense. After minus all the expense from my income, whatever money left, that money goes in my pocket. That's the meaning of profit. Your money in your hand. Now you can use whatever you like with that money. You don't have to pay anything from this money to someone else. This is called profit left. All right. Now, what does it mean comparable? So for example, company A says that this is our financial information. We have profit, $50, right? For example, sales, let's say $70, and cost, let's say $20, right? So this is our profit is $50. Now you have company B. Company B says we have cost $20. That's it. Company B don't tell you how much is sales, and company B don't tell you how much is your profit, but company B only gives you cost, which is 20, same like as maybe company A. Now the question is, can you decide which company is better and in which company we should invest money? Can you make a decision?
No,
No. Why not?
because they don't have a comparable. For example, is they don't, we can compare with the sales of the two company and profits. So that's the reason why I think it's non comparable.
Yes, that's right. The information is not comparable. Company B providing lack of information. So means company B has to provide the standard information. Standard information means when you are giving the profit to the users, so obviously you have to tell the users how you are calculating profit. How much is your sales? How much is your cost? How much is your profit? This is very standard information. This is just example, right? So later you understand the complete standard to prepare the profit, and every company follow the same standard. Any company in Vietnam or outside the country, they always follow the same standard to prepare financial report. So make sure users can easily see, okay, sales of this company, this, sales of this company, this, profit of this company, this, profit of this company is that, cost is this, cost is this, and then they can compare. That's the meaning of comparable. If your financial information is not comparable with the other companies in the market, it doesn't matter what kind of company, doesn't matter it's a bank, doesn't matter it's a manufacturing company, doesn't matter it's a tourism company or it's an education sector, any company, information that you are providing in a financial statement, it must be standardized. It must be well structured that other people are following. Now the question is again same thing. Again, how do I know what other people are following the structure? The answer is they follow the accounting standard, because accounting standard tells you sales minus cost is profit. Accounting standard says that when you are preparing your financial report, you have to show profit like this. We will study in our topic 3 or topic 4, right? So that's the idea behind comparable. Everybody understand comparable? Move on to next. The last qualitative characteristics is consistency. Consistency. Now, what is consistency? What is the meaning of consistency? Consistency means same, equal. Now, what does it mean, consistency? I think I have to give you financial example. All right. So just this is just example. So don't worry too much if you do not understand, but I will try to explain you. Don't worry about the methods. Okay, let me write down and you understand. You already know how to calculate profit, right? Which is sales minus cost, right? When you calculate cost in accounting, when you calculate cost, you have different methods. You have different methods to calculate cost. Let's say method 1, method 2, method D. I am not telling you the name of method, because if I give you the name of method, then you say, oh teacher, can you tell me what this method about? So if I tell you this method, you may not understand because it's too early to know these methods. So we apply different methods to calculate cost. All right, when we calculate cost, we use different method, method 1 or method 2 or method 3, only one method. Right? Now, what is consistency? You know that we start preparing financial report from January, because it's 12 months, remember? January to December. It's a 12 months period. It start here and finish here. This is 1 year. So let's say this is 2020. And here 2021 to December 2021, right? Something like that. So first year, second year, so on, right? So for example, in January, I start preparing my accounts. I start calculating cost from January. So January, I start using method 1. Start using method 1. January, February, March, April, May, June. So let's say in July, I try to change to method 2. From 1 to 2, and then keep going on, and I finish. I cannot do that. The idea is the consistency means if you start using one method in the beginning of year, whole year, you have to follow same standard. You have to maintain consistency. Consistency means same, equality. You cannot switch to second method. If you want to use another method, you have to wait to finish your financial year. Financial year is end. Now next financial year start. If I want to change, I can change to second method, and then I start calculating my cost. I cannot change from second method to third method or second method to first method before my financial year ends, which is 12 months period. That's the meaning of consistency. This is just example. Doesn't matter, same thing when you calculate sales, when you calculate cost, or you calculate something else in company. Whatever methods you are applying, you cannot switch to another method unless financial years end. Once financial year ends, yes, then you can switch if you want to switch, or you can continue with the same methods if you want. That's the idea behind your consistency. All right, so now you don't worry about what are the meaning of methods and this and that. That's not important. The important is any method you are applied to calculate anything in your calculation, in your number, you cannot switch within 12 months. You have to wait to finish. Once finished, new financial year start, and then your new method. Then you keep going on. All right. Everybody understand? Is that okay? All right. So that's all about qualitative characteristics of financial information. So number 2, qualitative characteristics of financial information are finished. So I quickly summarize. Qualitative characteristics of financial information contains 4 things: relevant, reliable, consistency, and comparable. Information must be relevant. If information is old or expire, there is no any value of that information. That information is useless. Reliable, right? Reliable means information must be true and fair. True means real information. Fair means it must be for every kinds of users, not only shareholder or government or powerful users. Comparable, the information structure or the information way that you are presenting in your financial information, it must be standardized. So other users can easily compare your company financial information with the other company financial information, so they can make a decision. Exactly. You can compare the taste of apple with the taste of another apple. You cannot compare the taste of apple with the taste of banana. If you say that which fruits has a better taste, you cannot compare, because again, the apple characteristics are different, the taste and everything, nutrition value different than the banana. So apple with the apple. So exactly, if you want your company financial information must be comparable with other company financial information, your company information must be standardized as per the other company financial information. That's called the comparable. And finally, consistency. You cannot switch method before 12 months. Within 12 months, you cannot switch. You have to wait to finish your financial year, then you can switch if you want. So now can we move on to the next, which is the element of financial information? All right. So everybody finished writing? Can I erase it?
Yes.
All right. Now the next is elements of financial information, which is number 3. Elements of financial information. Right? Elements of financial information. Now, what does it mean, the elements of financial information? Now, remember, elements of financial information means, if I say, because from lecture 1 until now, I am keep talking about financial information, and financial information. Now you may be curious, what inside financial information? What does it mean, financial information? What is the content of financial information? So that's what we're going to look at here. The elements of financial information means what inside financial information. Remember, any company in the world, any financial information in the world contains only 5 elements. So means every financial information comes under these 5 elements, nothing out of that. All right. So what these 5? Assets, liability, equity, income, expense. That's it. That is your financial information. I will write down for you, but I repeat: assets, liability, equity, income, and expense. So this is your financial information. Know any information out of these 5 elements. All right. So we have total assets, total liability, equity, income, and expense. Right. So we have 5 components or 5 elements of financial information. All right. Now let's start with the first. Now, what does it mean, assets? Assets means something you owned. All right. Let me explain you quickly one by one, and then I will draw a small diagram for you to understand. All right. Assets. Assets means something you owned. You know what is the meaning of owned? You are the owner. Owner means you have right to sell. You can do whatever you like. You have a right. You have privilege. Right? Everybody knows the right. Right? So you have a right. Now, what is liability? Liability means something you owed. Owed means something you borrowed. If something you borrowed, you have obligation to pay. You know obligation? Everybody knows obligation? You never heard obligation? Obligation means this is your liability. You have to pay back. That's called the obligation. Something is your burden. You know burden? Something is your burden. B-U-R-D-A-N, I guess. Burden. Something have your burden. I think you have to pay back. So I don't know how to explain.
So is it just like rules or like regulations, rules?
No. It's not a regulation. It's like, for example, I borrow money from you. Now it's my obligations to pay you back because I borrow. It's my burden. I borrow money from you. It's my burden to return money back to you. That's the meaning of obligations. All right. Obligation is also an English word. It's not a business word. So later maybe you can translate into
do you think like it is a duty?
Yes, kind of duty. Yes, you
Or
can say.
responsibility.
Yes, actually the word responsibility and duty is someone will actually, in business point of view, they have a completely different meaning, but in general life you can say that. Like as in business point of view, duty and responsibility means someone asks you to do this. That's the meaning of duty or responsibility. But in liability, nobody asks you to borrow money. All right, so you borrow by yourself.
Also, like it's like a common sense. For example, I borrow you money, I must pay back. I must have duty to pay back. Do you think it's like
Yes,
this?
you can say that. I borrow, now I have a duty to pay back. Yes, you can say that, but you cannot say the word duty only. So you can say, yes, it's my duty to pay back. You can say that. Or it's my responsibility to pay back. Because I borrow. I am the person who is responsible for paying this money back. This has become your obligation. All right. This become your obligation. Everybody understand liability? The simple example is you borrow money from bank. I also write the word borrow. If you do not understand the obligations to pay, you can see borrow. Borrow means, everybody know borrow? Right? Yes, borrow. So you have to pay. This is your obligation. Something you borrow, you pay, called obligation. You can say that. All right. Now, total assets, total liability. What is equity? Equity means, equity have basically two ways to understand, but I will explain you one first. Equity means shareholders' money. The money shareholder invest in your business, that's called the equity. All right. The money shareholder invest in your business, this is called equity. You do not borrow from shareholder. Remember, there is a, because they give you money, but this money you borrow, so you have an obligation. But this money you do not borrow. Do not borrow means when the shareholder invests money in your company, you don't have to return that money back to them, because they invested in your business. So in exchange, you give them a share. I will explain you later what is the meaning of share. All right. So equity means shareholders' money. The money shareholder invested in your business, or the money that belongs to shareholder, that's called the equity. This is a company. This is a company. So this part of company belongs to shareholder. Why? Because shareholders, they invested money in this part. So they owned, or you can say that they control company, that much company controlled by shareholders. You don't have to return this money to the shareholders. They owned the company. You can say that. So this part, all right? This area, right? So that area belongs to shareholder. For example, this is just an example. Later I will explain you more in detail what is that and how things happen. Now I'm explaining you a very simple idea of equity, right? Now next is income. You also know income. Income means sales, the money you earn by selling product and service. The money you earn. The money you earn. If I say you means company. We are a company, right? We're not a people. People generally don't prepare financial report, but company. Right? Earn. The money you earn. Maybe you by selling product and service, or by doing something else. All right. Expense means the money you spend. So the money you earn, that's called sales. The money you spend, that's called cost. All right. So these are the 5 components of financial, 5 elements of financial information. Now, before I move on to explain what inside assets, what inside liability, let me explain you something. So you really understand what is equity, what is liability, and what is asset. Let me draw a small diagram so you will understand. Now, for example, you wanna start a company. You already open a company. Now you wanna start a company. What do you need? If you wanna start a company, you need a
investment,
money.
capital.
Yes, the good word is capital, right? Simple language, you need money. We also call it finance.
Budget. Finance. Budget.
No, not budget. Not budget. Budget something else. Finance. Or another good word is a capital. Right? A very simple language is money. or finance or capital. But I prefer you call it capital, or second, I prefer you call finance. But I like this word. I like capital. I like to say capital. Okay, so now you need a capital. Where this capital comes from? Two ways to get this capital. All right. The two ways to get this capital. Student, can you please, anybody please turn it off your mic if you have any question. Capital. So capital comes from two ways. One is you borrow from bank. This is called, when you borrow from bank, we call. Do you know that? Everybody know that?
Can you explain it?
You never heard bank loan?
Yes.
Borrow money from bank. Bank loan.
It means you borrow the money from bank.
Yes, borrow money from bank. You never heard borrow money from bank? Anybody in the class who never heard borrow from bank?
I think they are understand.
Okay. All right. So one is a bank loan. Bank loan means your total liability or liability, because you borrow and you have to return what I write down here, right? Borrow from bank. And then or and, not or and, another way is a sell share. Sell share to who? Sell share to shareholder, or you call them investor. Investor buy the share, investor hold the share, investor become shareholder. All right. Now, I come back to this point. When you borrow money from bank, you have to return them a interest time to time. Do you know that? Have you heard about it? If you borrow money from bank, you have to pay them interest time to time. Or you have to return money back with interest. Do you know that? You never know. For example, you borrow money from bank $10,000. And when you return money back to bank, do you return $10,000?
No,
No.
more.
More. Why more?
More.
Why more? Because bank is a bank business. Bank need to make money. So bank lends you $10,000, but when you return money back to bank, bank say that you have to pay me 10% interest. 10% interest means 10% of 10,000 is 1,000. So you have to return back to me $11,000, and $1,000 I made interest. Interest means bank income, bank profit. That's the way that bank make money. Everybody understand? So you have to pay interest to bank, right? Same shareholder. When shareholder invest in your company, they buy share. Now the question is, what is share? Anybody knows what is share? Share simply a piece of paper that describe a small part of company in form of money. What is the meaning of share in simple language? Share means part. For example, I start a company. This is a company. This total value of this company, for example, $1,000. Now I want to sell my share to the. All right. So now, what is the meaning of share? So your money, your company value is $1,000. Now means you want to raise money. How can you raise money? You sell the small part of company. So what are you going to do? You're going to divide, for example, you're going to divide this company into 1,000 parts. 1,000 parts. This is the parts of company in 1,000 parts. So 1,000 part means one part equal to $1. So this is your one share. So the person who hold more share become a more powerful because he holding more and more share. The more share you hold, the more powerful you are. Let's say Mr. A, Mr. B, Mr. C, Mr. D, Mr. E. So they become the shareholder, who hold the share. Now, so means simple language, shareholder, they supply money to company. They supply money to company. In exchange, company give them a part. All right. So means company is not borrowing anything. Company is simply selling the share, and in exchange, shareholder are supplying money. Now the question is, what shareholder have a profit? Why shareholder do that? Because company tells shareholder, if you give me share, when I use this money, because you give me money and I give you share, in future, when I have a profit, you also have a share in profit. Share means you have a part in profit. So the idea is that if my profit increase, you make more money. So shareholders are supplying money. So in future, they share the profit sharing with shareholder. Because they have a share in profit, they have share in everything. They have share in profit, share in loss, share in assets, share in liability. They have share in everything because they have share in company. So it means they have share in everything. That's the meaning of share. They have a part. All right, everybody understand?
Teacher,
Yes.
is it mean that they will buy the company future value?
We cannot say future value because we don't know what is the value of company in future. How we know? But you can say that they buying the value of company, not future. Because future we don't know, because you say that I am buying the future value of company. Now the question is, what is the future value of company? How we know? Of course, we have another formula, but that's different subject and different topic. But now we keep it very simple as possible.
Okay.
So yes, so the idea is that they are holding a share in company. They are holding share in everything. This is a company, you have a share, you have share in everything. All right, that's the meaning of share. All right.
Teacher,
Now, yes.
If you buy more share in the company, you have a power in company.
The more share you are buy, the more powerful shareholder you are. Of course, because you supply more money. The more part you are buying, the more part you own. The more part you own, you become an owner, more controller, more powerful, more decision making. Because in this company, most of money comes from your pocket. So everybody will give you importance. Right? It's all about money. The more money you put, the more powerful you are in a company.
So do people, okay, so do people call the investors like similar to owners?
Yes. If I say investor, I mean to say shareholder.
Okay.
Yes. Investor or shareholder are same.
Oh no, I mean owners.
Owners? Yes. Owners means investors. Owners means shareholder.
Okay.
Because owned a company's value. Right?
So, teacher,
Yes.
if I have more share in the company, can I manage the company?
Yes. Of course. Why not? Remember, I think I explained you last time, but let me tell you one thing. If you do not know, just for your knowledge, this is not this subject, this is another subject, but let me just give you quick ideas so maybe you will be very clear. So remember, this person, who is this person? This person is a founder. Founder is a person who started the company. Founder has idea. All right. Founder has an idea, but founder has only idea. Founder doesn't have money. So founder will find a shareholder. I'm not talking about bank, because bank not investor, bank simply a lender. So now you need a shareholder. Shareholder is a person who supply money to company. So you have an idea, now you need finance. Now you got idea, you got finance, but I have idea, because remember what I told you, I am engineer, I am a scientist, I have very, very good ideas, but I don't know how to run a business. In company, you have idea, but you do not know how to run your company in a market, how to use money, how to use fund, how to compete competitor, how to use the resources, how to manage the company, how to administrate the company. I don't know. I have no idea, because I am not accountant. I'm not a businessman. I'm just simply a scientist. I'm simply an engineer. I know how to make formulas, but I don't know how to run the company. And shareholders, I have money, but I don't know how to run the company too. So now I need a person who can manage the company. We call them chief executive officer or director, the person who manage the company. All right. Now, these are generally they are three different people, very simple language. But sometimes founder can be a shareholder, and shareholder can be a CEO. So founder can be shareholder, can be CEO. But again, remember, founder is not only one shareholder. In company, we do not have one shareholder. Remember that, because company need $1 million billion. So we require many people. Maybe one people may not enough to invest money in that company. So we need a group of shareholders. That's why we never call shareholder, we call shareholders who buy shares. So that's the whole idea about the company. Very basic thing about the company. All right. So your question was, teacher, if I am a shareholder, can I be a director or manager? Yes, why not? Why not? But remember, one person cannot be expertise in everything. That's true. One person may be brilliant at the ideas, but that person may not have a good money, like a Steve Jobs. He was the founder, he was CEO, but he wasn't a shareholder of Apple. Elon Musk, founder and CEO, but Elon Musk also shareholder, but some other shareholder also have in SpaceX company. So better we should find different people. Why? Because these different people are expertise in the field. The CEO, expertise about market, very smart people, very competitive people who know how to use resources to make money. That I'm going to do next. Very smart person. A shareholder, very wealthy person. They find the good investment where they can invest money to make money. Wealthy people, rich people, founder with brilliant ideas, with great ideas. But again, remember, in most of cases, founder can be a CEO in most cases, because founder have a great ideas, and CEO also transform that ideas into more productive activities. All right. But generally, if you take example of Google, different. If you take example of Apple, now Steve Jobs already died, so founder was different, shareholder different, now CEO, which is Tim Cook, who also different. So different people. All right. So that's the idea. But the question, but it's not always different. It could be same. All right. So that's not so that.
So teacher, I have a question that is it different between a share and a stock? Because I heard that if you have a lot of stock from that company, you're quite powerful. And is it the same with it?
Yes,
and I thought that we can, yeah, we can sell the stock for the shareholder.
No. Stock means shares. Stock market, share market.
Okay.
All right, so now let's move on to our diagram and then finish, and then we go for break after explaining this one. So now we got money. We got money from bank and we got money from a shareholder. So we got finance now, right? Okay. Now what we're gonna do this finance, we will invest. If I say invest means, remember, I will buy assets. That I will explain you later. Buy assets, I need assets. The example is land, building, machinery, material, etc. Land, building, machine, material, etc. Right? So I will buy assets. Buy assets means invest money. Why I need to buy asset? If I buy assets, then of course I will produce. If I want to produce product, I need to buy asset, right? So once I produce product, then I will sell my product. Sell my product. Produce means I have to spend money as a cost. When I produce product, I have to spend money, cost. But this is not cost, this is invest. All right. So when I spend money to produce product is a cost. So I have cost and I have a sell product is income. Income. So income minus cost is, I just explained you before, profit. So now I use this profit to give share to the shareholder. So the more profit increase, the more shareholder will be richer. So CEO of company, they make investment decision. The CEO of company invest money, make products so effective, so unique, so we can sell more and more product, make more and more profit. So that's the whole idea. The most important thing here is what is equity, what is liability, that's the meaning of liability, what is asset, that is assets. This one obviously income and expense, right? That's the whole idea here. So that's why we have a 5 component, most important: assets, liability, equity, income, expense. So the question is, which come first? Assets never come first. Remember, assets come later, but I write down need money, then we go to bank. Then we invest, which is asset. Then we produce, and then we sell. So obviously 5 minus 4 is profit. All right. That's the whole idea here. So this is the order. Remember, this is not 1, 2, 3, 4, 5. No, 1, 2, 3, 4, 5. This is the way to start the company, run the company. If someone asks you what is company, that is company. That's the meaning of company. All right, that's the company start. Very, very basic way to understand what is a company. This is a company. That's the way that company run. Any company in the world, because I'm not saying that is it manufacturing company, is it bank, is it this, is it that? No, any company in the world like this. Start company, need money, money come from shareholder, money come from banks or liability, and then once we got finance, once we got the money, then we invest this money. Where we invest? To buy assets. Why we need to buy assets? Because assets means resource to produce. Because if you want to produce, you need resource. So once you produce, then you sell, and then you make money. And you make money, you give more profit. The more profit you make, more shareholder will be happy. All right.
teacher, if there is someone want to start up, doing startup themselves, they using their own money, pocket money. So where is that? Where is the pocket money position in this
Okay.
model? Do you
All right.
think?
Okay. So remember, I am telling you about a company. This is a company. There is a difference. Okay. There is a business. There are three types of business: sole trader, partnership, and a company. This is a company, right? So the example you said, startup is a sole trading business. Startup is not a company. All right. If you want to know about company, I can explain you later what is the difference between a sole trader, partnership, and company. But this topic you will study later in another subject called the corporate finance. But just for your knowledge, the sole trader are not a company. Company has a definition. Company has a meaning. All right. So this is not a startup. This is not a partnership. This is a company. So very simple way to understand what is company. Company means selling share. Any business who sells share, that is a company. Startup, you don't sell share. Like when you start your own startup, do you sell share? No, because you don't have right to sell share, because you have to take a license from government to sell the share. Again, this is actually another subject that you will study in future. All right, but just for your knowledge, this is a company. This is not a startup. Startup is a sole trader. Sole trader means business done by one person.
Yes, thank you, teacher.
Yeah. Any questions, anybody? So now we can go for a break. If no question, after break, we will start with what inside assets, what inside liability, what inside equity, what inside income, what inside expense. But as far as now I know, you already understand what is this asset, liability, equity, income, expense. You got the very broad picture. Everybody's clear about it? Why we need asset, why liability, what is equity, blah, blah, blah. Right? This is a very detailed. So now we can have a break, and I'll see you after break. Right? I'll see you in 20 minutes. Thank you. Okay, everyone, so we start. Please turn on your cameras, everybody.
Sure. I have a question.
Yes.
Yeah. I was watching a Shark Tank, and I hear a term is angel investor. Is it the same for the shareholder?
They are different. Angel investors, probably the major difference between angel investors and the shareholders is angel investors, they may not take control in a company. They simply are just an investor without taking any kinds of control or without taking any kinds of important decision in a company. Whereas shareholders, they involve in making important decisions. We normally have angel investors for startups. Probably we have.
Yes.
Right? Do you understand that?
Yeah, thank you. I got it.
Yeah. So now let's start with the total assets. Right? All right.
Teacher,
Yes.
This is just a random question that popped up in my head, but when a company starts corrupting, who will take responsibility for the shareholders' money?
Start bankrupt,
Yeah, like,
then nobody take responsibility. I mean, what do you mean by responsibility about what? Because when company bankrupt, who will be responsible for it?
yeah, like who's going to repay the money for the shareholder, or it's just lost?
Shareholders, they lose money if the company is a private company. Okay, I will answer this question later on, because when company going to bankrupt, it's not just bankrupt and company disappear like this. No, it has a procedure to procedure to end the company. Like we have a procedure to start the company, right? Then when company fall down, when company bankrupt, there is a procedure to close down the company. Now in that procedure, we start making a payments to the shareholder as well. It doesn't mean the shareholder will get zero money, of course not. So yes, that's probably I will talk some other time, but again, it's a procedure, complete procedure. We have to understand what is that procedure. Like for example, we start selling the assets, which is called liquidations. So we have to go through with the liquidation process, and when we go through with the liquidation process, we have to start making a payments to the different people, and then finally we coming up to making a payments to the shareholders. Yeah, that's a bit, maybe some other time we will talk about it. All right, but of course shareholders, they're not going to lose all money. Again, it depends, and sometimes they may not lose money. It depends, right? All right, so now let's talk about the asset. Right. Now we have two types of assets, right? We have two types of asset. One is a current asset. Make sure, student, whatever I am explaining you right now, asset, liability, equity, income, expense, you must remember until not you finish this subject, at least until you finish this your bachelor degree, because this thing we will use it again and again, again and again. So you must remember that, right? You memorize it or you do whatever you like, but you need to remember current asset. Next is the non-current asset. Right? Non-current asset. Now, what is the current asset and what is non-current asset? Current asset is any types of assets that we can easily convert into cash. Right? That can be easily convert into cash. When we need cash, we can convert into cash. We can get it cash by disposing these asset. And non-current assets, we also call it fixed assets. We also call it fixed assets. So fixed asset is that type of assets that we cannot easily convert into cash, right? Not easily convert into cash. Not easily convert into cash, right? Not easy to convert into cash. Now, what are the current assets? So current asset, we have cash. So obviously company has a cash, maybe company cash in hand or cash at bank. Cash in hand or cash at bank means you money in the cash, you have cash in hand or you keep cash in the bank, but cash is your current asset because something that you can easily convert into cash, right? Next is the accounts receivable. Accounts receivable. Now, what is the meaning of accounts receivable? So let me explain you. When we sell product, we have two options to sell the product. We sell on cash or we sell in credit. Now, cash, we call it cash sales. We call it credit sales. I repeat, this is your cash sales. This is your credit sales. Cash sales means I sell now and customer pay me money now, right? Sell now and receive money now. This is called cash. I give you product, you give me cash, done, right? What is credit sales? Credit sales means I sell now and we will receive from customer later. I sell you product now, but you will pay me later. Remember, this is not normally happen when we go to supermarket. No, this is not, I'm talking about supermarket. I'm talking about the company and the client, the customers, all right? So two options we have: company sell now, receive money now, or company sell now, receive later. Receive later means customer will pay later. So the customer who will pay later, that customer will become account receivable. Now, what is account receivable? Account receivable is a person from whom, or the person from company need to receive money. Receive money. And obviously receive within 1 year, right? Short term. It's like not after 5 years, 6 years, maybe 2 months, 3 months, 4 weeks, 5 weeks. It depends. Account means, now why we call it account receivable? Account, if I say account means person, like as Facebook account. From Facebook point of view, you are just an account. So you are a person. And receive means you will receive, receivable. You are able to receive. You are able to receive. Why are you able to receive? Because you sell product to the customer. So that's the meaning of account receivable. This is account receivable. When companies sell product to the customers, this is called credit sales. When company sell product to customer on credit, remember, it has nothing to do with credit card or nothing. So that's completely different story and different things. When companies sell product to the customer on credit, that customer become account receivable. So means company has a right to receive money, receive cash after 1 week, 2 weeks, 3 weeks. So means short terms, your account receivable will turns into cash soon or later. All right. So that's why account receivable are your current asset. Remember that. I repeat, remember that. Right? Very, very, very important. Everything whatever I'm writing here, very important for your calculation. If you do not know, if you do not remember, then you may not calculate anything. All right. So it's very important for you. Everybody okay with it? Account receivable? Let's move on to the next, the third types of current asset. The third type of current asset is a closing inventory. Closing inventory. Now, what is the meaning of closing inventory? Closing, okay. Everybody knows the meaning of inventory? Do you know inventory? No? Okay. Inventory means product or material. Normally product or any material that we used in a product. That's called the inventory. Stock, not share, no, not share. Stocks. Stocks means inventory, goods, right? So what does it mean, closing inventory? Closing inventory means any kinds of inventory which is left at the end of the period. Means something we haven't sold it, still in a company. What does it mean? For example, today morning, I start my production. I produce 100 products, right? And I all day until night, I sold, let's say 9 products. And how many products are left? How many products are left? 10. 10 products are left. So 10 products are unsold, right? Left means I haven't sold it. So this 10 products are unsold. It's become my closing inventory. Closing inventory means today I close my business, I stop my business for today, and how much inventory left in my store department or in my production department. So tomorrow morning, when I start my work, I will start using my closing inventory. But now this is the end of the period, end of the year. So at the end of the year, that much inventory left in my production. So closing means unsold. Unsold inventory. The inventory we haven't sold it. Something left, exactly like this example. Make sure you remember this example. All right. So this is your closing inventory. All right. Everybody okay with it?
So I want to ask about the accounts receivable. So accounts receivable is a person.
Yes.
Right? Okay.
Yes. Account represent normally a person. When I say account, means person. Like as for example, you open your bank account. You are a person. That's why you open bank account. Bank account, email account, Facebook accounts, or Insta accounts and Twitter accounts. So all these are person. Account represent the identity or person. We call the word account. Account means something that keep the information about someone. So you are selling product to this customer. So you keep information in this account receivable account about this person. All right. All right. So closing inventory is your current asset. And the last types of current asset is a prepaid expense. Prepaid expense. Now, what does it mean, prepaid expense? Expense means payment. Prepaid expense means any kinds of expense that we paid in advance. So any expense paid in advance. Prepaid means you are paying first, paid in advance. When you pay something in advance, do you think you have a right to use that? Or you don't have a right to use something if you pay money in advance? What do you think? I repeat my question. My question is, whenever you pay anywhere or anything in advance, do you think you have a right to use it or you don't have a right to use?
I think we have a right to use it.
Yes, that's
We
right.
all do.
Yes, that's right. For example, your tuition fee. Do you think you pay tuition fee? Is it prepaid or postpaid? You know postpaid? Prepaid?
No, sir.
You don't know postpaid. Postpaid means Paid means pay. Post means later. We pay later. So do you pay your tuition fee, school fee, in advance, or you pay your tuition fee after you finish the semester?
I think before.
You before. So no any university or school, they ask money to pay later. So when you pay tuition fee to the university, for example, you already paid the tuition fee for this subject for this semester. So means you have a right to study. You purchase a right to study in this university for this semester. You have a right. You can do 3 months if you can do whatever you like. You can study if you like, or if you don't want to study, you will not study. So the idea is that you have a right. And remember what I explained you about the assets. Assets means rights. Assets represent the right, but this right is only short term, because you pay tuition fee for 1 semester. You never pay tuition fee for 5 years or 4 years. Normally, university asks you to pay semester by semester or course by course. Generally, semester by semester, or maximum 1 year, but generally 1 semester. So you pay 1 semester tuition fee. Now you have a right to study for 1 semester in this university. Nobody will stop you. Why you come to this university? Why do you study in this classroom? Why are you using university computer, this and that? No. So you have a right to use university computer. You have a right to sit in the class. You have a right to turn it on the aircon. You have a right to ask the questions to the teacher. You have a right to attend classes as per your schedule and so on. So means you are purchasing a right when you are paying expense in advance. So that's why prepaid expense, any kinds of prepaid, anything you paid in advance, especially it's an expense. Another example for prepaid expense is a rent. If some of you are renting a house or renting a room in Ho Chi Minh City, you may not live with your family. So if you're renting a house or renting a room in Ho Chi Minh City, so you know that you have to pay rent in advance. You never pay rent at the end of the month. You always pay rent in the beginning of the month. So once you paid a rent for this month, so now you purchase a right to live in this house, live in this room for this 1 month. If you pay rent for 2 months, you have a right to live 2 months in this house or in this room. That's the idea behind prepaid expense. Right? Everybody understand prepaid expense? Now, you have 4 types of, yes, any question?
Can you say again, closing inventory?
Okay. Closing inventory means anything company haven't sold at the end of the period. Something you haven't sold it still inside the company. For example, let's say you are selling a breads. This is your shop, right? You sell a bread. All day you bake some breads and you sell the breads. Then at night, when you're going to close down your shop, you will see how many breads you are left in your company. So this is your current asset. This is your asset. So tomorrow morning, when you start your shop again, you start using that asset. So something you haven't sold it, still inside company, it belongs to you. Assets means something belongs to you. All right. So closing inventory, just remembered in simple language, closing inventory means an unsold product because still it's remain inside the company. You haven't sold it, but you can sell to convert into cash. Right. So that's the idea behind a closing inventory. So now we have 4 types of total asset: cash, account receivable, closing inventory, and prepaid expense. All right. So that is current asset.
Okay, so you said that accounts receivable is one of the 4 current assets. So you mean that the accounts receivable is Is it that person or is the money of that?
No, it's a money. Everything
it's a
has
money.
money value. This person has, remember what I explained you last time? Something has a money value. This is called the financial information. These are money. Remember, these are money value. Cash, how
Okay.
much? Account receivable, how much? Remember, one thing, I just want to confirm everything. So whatever I am writing here, total asset, total liability, equity, income, expense, all are money. They have an item. An item has a money value, like as current asset is the item. It has a money value. So what is the money value of current asset? It's cash, money value. Account receivable, money value. Closing inventory, how many product? 10 product. How much is the value of 10 product? Maybe $100. So closing inventory, $100. All right. Prepaid expense, money value.
Okay.
Right.
Yeah.
Okay. So that's all about your current asset. Now let's move on to the non-current asset. Now what inside non-current asset? Non-current asset divided into two parts. We have two types of non-current asset.
Sir, can I have some question? I am not sure about the account receivable, sir.
Yes. Okay. Let me give you example. Account receivable. For example, this is me. Who I am a company, right? And this is you. Who are you? Account receivable, right? Now I sold product to you, right? I sold a product to you. Now you said that I don't have money, I will pay you later. And I believe you because I have been doing a business from you many, many times. You're not a completely new customer to me. If you are a new customer, I will sell you in cash. But you are a very long, loyal customer. You are a very old customer. I know you very well. So we have a very good business relation. So you said that you will pay me later. You will pay later. This is called credit sales. This is called a credit sale. If I use the word credit sales, so obviously it's not a cash sale. So credit sale means I have to receive money from this person later. So it means I have to receive money from you later. All right.
Thank you, teacher.
Yeah, so you are become my account. Account means a person. A person. Receive means I have to receive money from you. Receivable. I am able to receive. So account receivable is a person from whom I am able to receive money, and this person is my current asset. Why? Because able to receive means I have right to receive. Why I have right to receive? Because I sold you something and I signed a contract with you. So that contract says that I have a right to receive money from you, $100 after 2 months, for example. All right.
Teacher?
Yes.
Does credit sale usually contain like interest, overtime interest?
No, never ever. Never ever. I sell you product $100 and you said that you will pay me money after $100. You pay me $100 after 3 months. Okay, no interest. If I will ask you interest, you're not gonna buy money from me. You're not gonna buy product from me. You go to my competitor. You buy product from my competitor because it's all about competition. Because if I charge you interest, the price of product increase. If the price of product increase, customers say that no, this company is expensive. Same product company B is selling with low price, so they will go to the competitor. Remember, there is a competitive market, right? So normally they never use the word interest when we sell the product. Interest word used when you lend money, like as you borrow from bank, or bank lend you money, or one company lend money to another company, or something like that. Right. All right, so non-current asset. Non-current asset divided into two parts. One is a tangible non-current asset, and another one is intangible. Anybody knows the meaning of tangible and intangible? Tangible means something we can
Something you can see, you can touch.
yes, something we can see, we can touch. That's called tangible. Intangible means probably invisible. All right, we can't see, we can't touch. All right, now what are the tangible assets? Tangible assets, we have land and building. Land and building, plant and machinery. Remember, if I say plant doesn't mean that plant or tree. Plant means the area, the factory area where we set up all the machine and the equipments. This is called the plant. Plant, not the plant and the trees. No, it's not, has nothing to do with trees or stuff. All right, so it's an area where we are planting various types of set up various types of, no, not planting, sorry, we set up the various types of machines, equipments, the area, the location, the factory. That's called the plant. Like a manufacturing plant. Have you heard the word? They use the word manufacturing plant. Is the manufacturing location or the place where we set up all the machines. So plant and machinery and equipments. You need equipments, some equipments and tools, right? We need some vehicles and some what else? Furniture. Yes, I think that's all what we have. Yes, so land, building, plant, machinery, equipment, tools, vehicle, furniture. We need all these things, right? We require all these things to have a resources to produce product, because assets means resource, right? Now, intangible asset. What inside intangible asset? Intangible asset is any kinds of assets that you cannot see and you cannot touch. For example, the brand name. Brand name is your non-current asset. You know brand name, like as Apple, Samsung, Sony, Google. Brand name and logo. You know logo? Everybody knows the logo. Logo is the sign, your brand sign.
Yes.
All right. Next, intangible assets could be copyright. Copyright. Everybody knows copyright?
Yes.
Copyright and patent. Everybody knows the patent? Have you heard the word patent?
No.
No. Patent is like as copyright, but a little bit different. Patent means, for example, you introduce a formula. You have some formula about something. Now, if you wanna use that other company wanna use the formula, you're not gonna sell them formula. You just give them, you can say that you can sell them formula, but when you sell them formula, you sign a contract with them that you have to pay me a royalty. Royalty means the money, regular money you have to pay me if you are using my formula. I can give you a quick example. The quick example to understand patent is a Android. You know Android operating system? Okay, so we have only two operating system in a market, iOS, which is from Apple, and Android from which company?
Samsung.
Google.
Oh, not Samsung. Yes, not Samsung. Android from
Microsoft.
From
no
Google.
Google. Yes, Android from Google. Google introduced Android, all right, operating system. So Android is a patent of Google. If any mobile phone except Apple, because Apple they have their own operating system, if any mobile phone, they need operating system, because without operating system mobile phone cannot run. All the software things run with operating system. So they have to pay the royalty, or they have to pay the patent, because we call it Google has a patent of Android. So if any mobile phone company they want to use the Android, they're not going to buy one time. They have to pay them money time to time. They are making profit, they pay some money to Google. They make profit, they Samsung, Sony, all these Android mobile, they have to pay money to the Google. So it's become your asset. What does it mean, asset? Asset is a resource that help you to make money. And what actually you are doing here, you are have a patent. Same thing with the Microsoft. Microsoft, they have some kinds of Intel chip or any kinds of semiconductor. No, not from micro, semiconductor from another, but Intel chip or something. Intel has a patent. And any computer in the world, even Apple as well, any computer in the world, they require that processor or dual processor. I don't know what that IT things, but they require that kind of chip or some kind of things. That's called the patent. In simple language, patent is just any kinds of formula. Formula doesn't mean that medical science. Formula is anything. Formula could be IT, or formula could be medicals, formula could be like a vaccine formula, or any other kinds of formula. That's called the patent. You made it. Someone else couldn't made it because of your brilliancy or excellency or whatever you can call it. Everybody understand intangible asset? Copyright means just you have a right to copy your name. Only you can copy your name. No one else can copy your name without your permissions. You need to take permissions from you. This is called copyright. You have a right to copy your name. Copy and paste. Someone else cannot copy and paste your name on their product, on their service. Patent is all about the technology, formulas, techniques, or any things. Everybody understand current asset and non-current asset? That's all about your current asset and non-current asset. Now let's move on to the total liability. Now, what is total liability? Right. Now, total liability divided into two parts. We have non-current liability, non-current liability, So we have a non-current liability and we have a current liability. All right. Non-current liability and a current liability. Right? Now, what is non-current liability? Non-current liability is a liability, of course, it's a liability that you have to pay back because you have obligations. So non-current liability is a liability that you have to pay in a long term. You don't have to pay now or tomorrow, in a long term. Now, what does it mean, long terms? Long term means non-current liabilities are those liabilities that you have to pay after 1 year. You don't have to pay before 1 year or within 1 year. So you have to pay after 1 year. It could be 1 year, 2 years, 3 years, 5 years, 10 years, 20 years. You borrow money for 2 years, 3 years, 4 years, 5 years. That's called the non-current liability. And current liabilities is those liability that you have to pay within a year. Current means less than 1 year, within 12 months, not more than 12 months. So I repeat, non-current liability is the liability that we have to pay after 1 year. And current liability is the liability that we have to pay within 1 year. All right, so that's the meaning of non-current liability and a current liability. Now, what is non-current liability? You know that I already explained you non-current liability. Non-current liability include a bank loan. Non-current liability is a bank loan. Bank loan means borrow money from bank. Borrow money from bank, call a bank loan, and we have to return that money back to bank with interest. All right, that is bank loan. And remember, when you borrow money from bank, do you think bank need anything from you? If you borrow money from bank, if you go to bank to borrow money, bank need anything from you as a security?
Need our financial information.
Not only financial information, as a security. Bank need anything from you?
Need assets.
Both.
Yes, bank need assets from you, especially land and building. Of course, the document. You have to show the document by your name, land and building. All right. So why bank need that? Anybody knows?
Because I remember when you lose, when your company is bankrupt, they will collect all your access to pay your loans. Like exchange
not company bankrupt, when company do not return money back to bank. If company do not return money back to bank, but it doesn't mean that company bankrupt. Maybe company have a financial problems, but company bankrupt, because bankrupt is the last step. Like, as for example, company do not return money back to bank means company sick. If we are sick, it doesn't mean that people take us to go to cemetery and then they just arrange a funeral for us because this person is sick, he's going to die, okay, take him and burn him. No, we're not going to do this. All right, so there is a difference between when company is sick and company is die. All right, So when company do not return money back to bank, maybe company is sick. But again, if company is sick, we have to find the treatment. Otherwise, same with us. If we are sick, we are not taking any medication, anything, we also eventually die. All right. So the idea is, yes, she's right. If company do not return money back to bank, bank will take the asset, bank will sell the asset, and bank recover money by selling the assets. That is the purpose for bank to take assets when bank lend money to the customer. Now, what we call it? We call it mortgage the asset. We call it mortgage. We call it mortgage. What does it mean, mortgage? Mortgage means you have to give your assets to bank as a security. This is called the mortgage. Mortgage loan, you can call it mortgage loan, or you can call it bank loan, because loan means mortgage the asset. Everybody understand the word mortgage the asset? Because this word I will use again and again, I will repeat again and again. So I repeat, mortgage means when you give your assets to the bank as a security, that's called mortgage. Remember the word, you memorize it, you write, or you do whatever you like, but remember the word mortgage. All right, remember that. Okay, so bank loan. So bank loan is your non-current liability. We don't have much, we have other non-current liability. I think that's enough, because we normally use bank loan when we prepare financial information. So in non-current liability, we only have bank loan. For this moment, only have bank loan. Again, we have more, but don't worry about it. All right, just focus on the bank loan. Now let's talk about the current liability, and then we will stop. Current liability is company has current liabilities are those liability or obligations that company has to pay within a year, within 12 months. All right, so that is your current liability. Now, what inside current liability? What inside current liability? In current liability, we have, number one is accounts payable. Anybody has any idea what is accounts payable? Anybody can explain to me? If it's opposite of account receivable. I can give you example, supplier or purchase. Can you explain me, anybody? Accounts payable without Google? No, in simple language, company point of view, what does it mean, accounts payable? Who is accounts payable? I guess from company point of view, account receivable means the customer, right? Now, company point of view, yes. Yes? Customer, what happened to customer? Anybody else? Explain me.
So
Accounts.
customers can pay immediately, or
That's cash. That's cash sales.
oh, this can.
This is not sales. This is purchase. So what is that?
So account payable is like when you will use you will get the product first and pay the money later for the supplier, and you can pay it in a short term, and like you will use your purchase, you already know the purchase and buy your familiar supplier already, and you guys have a compromise when you're going to pay, and they allow you to delay the day for paying the money, and you can pay it later. That's what I
That's
think.
right. Yes, that's right. Now I explain you what is accounts payable. When I say payable, I'm going to write so you can see. Same. Remember, if I say receivable, receivable means sales and payable means purchase. Now we have two types of purchase. Same like as we have two types of sales, we have two types of purchase. One is a cash purchase. Cash purchase means you purchase material now and you pay money now. You means company. Everything is company. If I say always, I repeat, if I say you means you are a company, you are preparing your financial information. So you are a company, you purchase from supplier. What do you purchase? You purchase raw material because supplier material. So you purchase raw material from supplier. So two options. One is you purchase from supplier right now, you pay right now. Option one, this is called cash purchase. Purchase now, buy now, pay now. All right. So buy now and pay now. This is called cash. Everything right now, like as credit, like as cash sales. Sell now, receive now. All right. So here, buy now, pay now. Credit purchase. Credit purchase means buy now, but pay later. So pay later means this is a credit purchase. Buy now, but pay later is a credit purchase. So pay later to who? Pay later to supplier, right? And this supplier will become your accounts payable. What does it mean, accounts payable? Accounts means person, supplier is the person, payable. You are able to pay to this person. This is your obligations to pay money to this person. So what is accounts payable? Accounts payable is a person, you can call it person or you can call it supplier. Accounts payable is a supplier to whom you have to pay money. That's it. So that's why this is your, you have to pay, this is your obligation. This is your current liability. And of course, you're gonna pay in short period, 1 month, 2 months, 3 months, right? You're not gonna pay after 5 years or after 10 years or after 1 year. Nobody likes to wait long like this, right? So everybody understand accounts payable? Don't be confused between accounts payable and account receivable. Account receivable, credit sales. Accounts payable, credit purchase. Account receivable, current asset. Accounts payable, current liability. All right. Pick it up, pick it up, pick it up. Yes, you can. Pick it up. So everybody understand? Accounts payable and yes. Now, next, is bank overdraft. What is bank overdraft? Bank overdraft, same like as it's a credit card, is like as credit card. What is that? Like as credit card. For example, now I explain you what is credit card if some of you do not know how credit card works. So credit card means banks give you a credit card. Like this is the bank name is ACB Bank, right? Bank gave you credit card. So in credit card, bank give you money, of course. Let's say bank giving you $1,000, right? So means you can use this. This is not your money. This is bank money. So bank is giving you $1,000 as a limit. So you can withdraw up to $1,000. So for example, you go for shopping and you use $600, right? So when bank give you $1,000 in a credit as a credit card, bank give you time. Bank says that if you use this credit card, let's say you use $600, then we are giving you, depends upon bank to bank. So for example, bank is giving you 60 days. Bank is giving you 60 days to return this $600 back because you used for this 1,000, you shopping $600. So bank is giving you 60 days to return money back to bank without any interest, no interest at all. If you return this money within 60 days, that's good. You don't have to pay any interest. You will pay zero interest. All right. But if you return after 60 days, then bank charge high interest. So now can you tell me, you will return this money within 60 days or you will return money after 60 days? Within 60 days, right? So if within 60 days is current liability. And why is liability? Because you use bank money, not your money. It sounds like as borrow money. You can say that it's like as borrow money, but not really, because in borrow money, normally you mortgage the asset, but here you don't mortgage anything. Bank give you credit card. And when you borrow money as a bank loan amount is very big. Credit card amount is not big as bank loan. Right? It's a small short-term bank loan, you can say that. But again, it's not right to say bank loan, because when we say the word bank loan, mortgage comes in our mind when we use the word bank loan. But here, no any mortgage. Bank do not need a mortgage. So normally bank give credit card to their loyal customers. Everybody understand?
Yes.
So this is your bank overdraft. Overdraft means over withdraw. If you over withdraw, then you have to pay. All right. So everybody okay with this bank overdraft?
Yes.
Now we have two more current liability left. One is unearned income, and another one is an outstanding expense that I will explain you in the next lecture. So current liability hasn't finished yet. So let me write down here so we can easily remember. Next lecture. So next class, we will study about unearned revenue, unearned income, and outstanding expense. Outstanding expense. These two things we will study in our next class, right? So that's enough for today, but make sure when you come back to the next class, you should remember everything here, not just read, because you need this information in calculation when you start your topic 2, right? So that's enough for today. So now ask me if you have any question.
So I want to ask about the credit card. So you said in that credit card is that that is the bank's money.
Yes.
Why is this bank's money?
Because
It's
bank
not,
is,
why is not our money?
it's a bank money. Why? Because bank is giving you credit card. Bank say that, okay, we are giving you money. Again, it's like as lending money. It's exactly like as lending money. So means bank is lending you very small money for your small expenses.
Okay, so
Yeah, it's a bank money. That's what I mean. Bank money means bank lending you money. This is
So,
not your money.
so what is the difference between credit card and debit card?
Okay, yes.
Yes.
Debit card means your ATM card. Debit card means this is your money. If in your bank account, if you have $100, can you withdraw more than $100? If in your bank account, if in your bank account you have a $100, can you withdraw more than $100?
No.
Never ever. That doesn't make any sense because in your bank account you have $100. So this is your ATM card. This is your debit card. Debit card means your ATM card. All right. So credit card also you can use as the ATM. You can also withdraw money from ATM using your credit card, no problem. But the difference between debit card and credit card means debit card means whatever money do you have in your bank account, you can withdraw only that money. Credit card, bank put money here. So you can use bank money, but again, you have to return back. That's why this is your current liability, right? That's the difference. So debit card means ATM card. Normally you and me, we use it on daily basis. We don't like to use credit card because we know we have to return back. So if we have money in our bank account, then why we don't use credit card? Is credit card for making online payments or credit card for some emergency, some exceptional cases, then people use credit card. But generally in daily life, we don't use credit card, right?
Okay, I got it.
So any question?
Yes, teacher. Can I ask you, insurance and tax is current liability or non-current liability?
Tax is your, again, remember, if any kinds of expense, I think this is the next question. You asked me it, I think too early. This is your outstanding expense. These are your outstanding expense that we will discuss in the next lecture. Anything, again, if you want to know something current or non-current, the idea is that something that you have to pay within a year that is current. Something you have to pay after a year. You don't need to pay within 1 year. But tax, do you think you have to pay tax after 1 year? No, you have to pay tax within a year. Otherwise, government will ask you, why are you not paying tax? Tax, government give you maximum 2 or 3 months to pay tax. It's like as your electricity bill. You have electricity bill, government give you 1 month, 2 weeks or 3 weeks, something like that.
And insurance, social insurance?
Same thing with the insurance. These two things we will discuss next lecture because we have outstanding expense.
I got it. Okay. Thank you, teacher.
Any other questions, anybody? No questions, so we stop here. Now I will see you next week. When I will see you? Tell me, please confirm the schedule.
Thursday.
Next week, Thursday morning, right? Or afternoon?
Yes.
Morning?
Yes, morning.
Yesterday morning.
Because because your change.
Yes. Thursday morning and Saturday, but this Saturday no class, all right? So next week, Thursday and Saturday. So now I will see you next week, Thursday morning, like as today. All right?
All right.
Okay, thank you.
Yes.